Welcome to Your Property Radio. I'm Joel Malkin here with the founders of whatisashortsale.org, Ray Noble and Anthony Krupe. Before I introduce you to the guys, I'm going to give out some information. I want you to grab a pen, write down the number. Believe me, before the show is over, you're going to want to call. You're going to want to check out whatisashortsale.org and find out more about this. 888-262-6933. Again, that's 888-262-6933. whatisashortsale.org is the website. Very important you remember that .org because they're here to help you. It's Ray Noble and Anthony Krupe. Guys, welcome aboard.
Joel, good to see you again.
Hi, Joel. How are you this morning?
I am doing well. Looking forward to football season and looking forward to finding out what is a short sale, Ray.
A short sale is when you sell your property for less than what you actually owe on the outstanding balance of the mortgage. It's an alternative solution for both the homeowner and the bank, Joel, to avoid foreclosure, which is why we've heard that term used so much in the real estate market over the last several years.
Today we're going to explain the short sale process, and we've been doing the show for quite a while. If you've been listening, you know, if you're just tuning in for the first time, we always kind of give a brief overview on the short sales and whatnot. Great way to avoid foreclosure, whether it's imminent or down the road. But this time around, we're going to have the guys go a little further in and delve into the short sale process, explain everything and what to do if you owe more than your property is worth, which is a situation for so many of us right now. And that is especially if you are in foreclosure. So, Ray Noble, go ahead and give us some more on this.
Good topic to talk about, Joel. And a lot of homeowners that I've personally spoken to, they've tried to even do a short sale themselves where they've contacted the bank like a loan modification, and the bank, sent them their short sale package, and they try to complete it, and they send it back to the bank. The bank doesn't get the package. They only get parts of the package, and they get very frustrated. One of the things that we do as industry professionals to assist homeowners in facilitating a short sale is we will help navigate through the complexities of the bank. First, there's a short sale package that needs to be completed, Joel. Every bank has their own package. It consists of different documents that you need to provide to the bank. Bank statements, W-2s, tax returns. The bank wants to see what your financial wherewithal is. Although, like we've spoken about in the past, it doesn't always necessarily have to be that financially you cannot afford to pay your mortgage. It could be for relocation for job purposes. It could be for marital purposes, separation, divorce, long-term disability for maybe one of the borrowers. Regardless of the reason, you still have to provide a financial package. You also have to write a very detailed hardship letter. The bank would like to see what has transpired in your life since you purchased the property, since you took out this mortgage with the bank to this current time. So again, it could be any of those applicable reasons, but you do have to write a detailed hardship. You do have to provide all these documents that the bank asks for. Again, bank statements, W-2s, pay stubs, things of that nature. And then once that package is complete, the package then is forwarded to the bank. Your property also has to be listed, which is another big question I get. People say, do I have to sell my property? Well, yes, it's a short sale, which is hence the word short sale. You're showing the bank that you are looking to sell your property, and you're hoping that the bank will give you an approval based on the fair market value of your property, Joel, not what you actually owe on the outstanding balance of the mortgage. So the property does have to be listed. One of the things that has to be furnished to the bank as well is what's called a listing agreement, which is going to be provided by the listing agent, which is the realtor, as well as an MLS report. And, of course, a contract when there is a contract, a proposed offer on the property. All these documents are submitted to the bank, and then the file goes through what's called document review. At that point, the bank will start reviewing your documents to see if there are any missing items, and if they will start requesting additional documents, which, again, is the steps that we help homeowners do. We will communicate with the bank on behalf of the homeowner and eliminate that frustration that most homeowners have experienced, especially when they've tried to do loan modifications. So the bank will communicate with our office, and then we in turn will communicate with the homeowner and let the homeowner, these are the additional documents that are needed, or even moving forward, these are the steps where your particular transaction is falling at this point in time. The banks are very inundated, Joel, as anyone could imagine. And they actually now have a system in place to cater towards short sales, which they didn't back in 2008 and 2009. There was absolutely no system whatsoever. But even with a system in place, and most banks use an automated system, which is called Equator, they're still very inundated. It's a very slow, tedious process. And frankly, you have to babysit every transaction. Our office, we literally contact the bank generally every 48 to 72 hours on behalf of just about every single transaction that we're working on, just to make sure that that client's file is moving along accordingly. If the file drags, Joel, and it doesn't move along, all the documents like we've spoken about, bank statements, W-2s, pay stubs, everything is date sensitive. So what happens is in the industry, we call this getting timed out. The file basically gets kicked out of the system. Tasks that might have been needed to be completed within a certain time frame were not completed. And basically, you have to start the file all over again. And that's when you hear nightmares of a short sale that really should take 90 to 120 days to have an approval, could drag out for a year, could drag out for 2 years.
Wow.
So yeah, there's a lot of micromanaging, so to speak, that really has to be done once that package is submitted to the bank in order to get to the finish line and get an actual approval.
Now, you talk about exhausting all your options every week, and we talk about loan modifications and all the different things. And you said that you have to disclose whether you have tried a loan modification to the bank. Does the bank require that? Or let me rephrase that. If the bank does not see that you tried unsuccessfully a loan mod, do you still have a good chance at getting the short sale?
Oh, absolutely. Doing a loan mod, getting approved for a loan mod, or even getting denied for a loan modification is not indicative of what will happen when you do a short sale. In many cases, people have tried a loan modification, Joel, and even gotten one, which is what we're really seeing a lot now. Back in 2008, 9, 10, people that were able to actually successfully get a loan modification, they probably didn't get a good enough deal that helped them as far as reducing their monthly payments.
Yeah, I was going to ask you, address what the issue is with the loan modification, because you would think somebody who's just listening, maybe they feel like, who needs a short sale? I can keep my home. A loan modification will work. But I understand in many cases it doesn't do what you wanted it to do.
Well, let's first talk about the optimal loan modification, a principal reduction loan modification, where the bank not only lowers your monthly payments, but they reduce the outstanding balance that's actually owed to what would be fair market value on the property. So let's say, for argument's sake, you owe your bank $200,000. The property's only worth $100,000 now. The bank gives you a loan modification. They reduce your monthly interest payments because they'll lower the interest rate, and they actually also lower the principal balance that's owed from the $200,000 to $100,000. That's in the perfect world.
How often does that happen?
Few and far between. The reality is the bank generally will lower your payment borderline insignificantly, and the back end of the mortgage, as far as what you owe on the property, will actually get increased because the money that they're actually reducing monthly gets put on the back end of the loan. So never mind lower the principal balance, it increases over time. And they'll even recast the loan. Let's say if you had a 30-year mortgage, they'll even recast it to a 40-year mortgage. So it's a very short-term solution that normally, like I said, makes a bad situation, in a lot of cases, even worse. And that's what we're seeing a lot of now. People that have done this in 2008, 9, 10, that maybe had the hopes of something changing drastically in their personal life, that really now are throwing their hands up in the air and saying, I actually even owe more now than I even did back in 2008 and 9. And sometimes the loan modification is only temporary, Joel, maybe over 3 years, 4 years, or 5 years, and they're put right back in the same situation as they are. And most people are well aware of the fact that the fact that the banks have been so aggressive and working with homeowners to do short sales, and with certain government programs that are still in place, like the HOFA program and the Mortgage Debt Relief Act, now really is the time, if you believe that you're in that situation, to put yourself even in a better situation and maybe take the opportunity to do a short sale, because some of these programs could cease to exist. They were already all set to expire in 2012. They were 4-year programs. They were first going to expire in 2012. They were extended, but they were only extended 1 more year. So both the HOFA program and the Mortgage Debt Relief program, if they're not extended, these are great government programs that a lot of people could take advantage of.
All right, we're going to get into some of your other options, some of these programs as well, and a little more into the short sale process. But before I do, I just want to let you know the short sale process that Ray Noble here with whatisashortsale.org, Anthony Krupa here as well, and he will be chiming in shortly. But I wanted you to know that if you go to whatisashortsale.org, that whole thing, all of that, the process is there for you for the taking. It is a free download. The how-to guide is what they call it on short sales, a short sale how-to guide at whatisashortsale.org. Also, 888-262-6933, 888-262-6933 is the number. You can call anytime and find out what type of programs are out there. If this is something that you'd rather chat about a little bit, then some people like the personal touch than just going online. Everybody's situation is different, and they just might have the answers. And these guys are just really here to help. So you talked about HOFA and the Mortgage Debt Relief Act, both going to expire at the end of the year. Potentially they could be extended, but let's address the fact that it's already we're heading into September. And I'm assuming these are processes that take a little while, right?
Right, absolutely. The first time when they were set to expire, they actually did. It was part of the whole fiscal cliff, and I believe they weren't reinstated until mid-January, right, Anthony?
Yes.
They actually did expire, so you're absolutely right, Joel. These processes do take time. And again, and I always tell people this even personally when I speak to them, if you believe something in your life can change, there's a lot of emotional attachment to their property, Joel. It's not as simple as sometimes a business
Sometimes
decision.
It's hard to walk away.
Absolutely. I hear it every day. But again, if you don't believe something's going to change in your life short term, you really don't want to sit on the fact that some of these programs that do exist to protect you could expire. And in a lot of other states, Joel, for the most part, a lender could actually go to auction 90 days after a notice is recorded, which would really expedite the foreclosure process. In the state of Florida, things are a little bit different. And I think people have taken that for granted, to be honest with you. In the normal scope of things, if you don't pay your mortgage over a certain amount of time, 3 months, you are served papers. You will get a list pendants filed against your property. Shortly thereafter, the bank is pressing for a foreclosure. You could literally be out on the street within 6 months, 7 months. It's really that simple. We have seen people that obviously have not paid their mortgage in 2-3 years, thinking that, okay, well, maybe I have more time, or maybe the bank isn't going to get to me.
And that's simply because of the backlog that we had because of the robo-signing and what have you that here in Florida. But I understand they're starting to slowly but surely catch up.
Oh, they are, and they will, and they're going to get even more aggressive. And all the major banks, the 5 major lenders were sued. There were 2 settlements, and they've settled already. And, of course, once they put that behind them, that's a good reason for them to, start accelerating what they need to do as well.
One of the key things about if you're in foreclosure, about like the program that Ray is talking about, the HOFA program, is that program actually offers you protection against the foreclosure sale. So if you're actually in foreclosure or you're about to maybe miss a payment, applying for the HOFA loan will actually protect you. That's why the government created this program. It's really a great program to be in, because although they'll continue to press on the actual foreclosure itself by filing the list pendants, maybe looking for a summary judgment, they actually don't set the sale, which is when you get evicted out of the property. So it's really important. This program is set to expire. You need to know about it. And if you're in the situation, you want to try to take advantage of it. And it's really easy to find out if you qualify for this program. That's something that we do. We help a lot of homeowners. Usually within a phone call to the bank, as long as you're talking to the right people, you can learn if you do qualify for this program. And that's something that we do for many people. You want to make sure you're talking to the right department. So in a lot of cases, we'll have clients that come to us and we'll actually get on the phone with the client and find out what program they may be qualified for, mainly the HOFA program. And it does give you some cash incentive as well if you are selling the property. So, it's going to expire this year. We're really hoping that it doesn't, but there is still time to take advantage of this. There's still plenty of time to get in the program and actually still close within this year.
And let's just spell it. If it's HOFA, HAFA, Home Affordable
foreclosure alternative.
Okay, so you can find it. You go to whatisashortsale.org, and you have all kinds of information on HOFA and the Mortgage Debt Relief Act.
Yes. And I've actually had a lot of people, just one thing I do want to clarify. People have said to me, I was on your website, and I downloaded the short sale guide, because the guide, like you spoke about, Joel, it gives a good, clear, concise about the HOFA program, the Mortgage Debt Relief Act, and even the processes. It'll give you a real good understanding, on the surface. And people have said, I read the guidelines for HOFA, and I don't think I'm going to qualify for a short sale. And upon speaking to them, not only did they qualify for an actual short sale, we were actually successfully able to help them get an approval. Yes, they might not have qualified for a HOFA short sale.
So people are seeing the qualifications for that specific program and just assuming that means if I don't qualify for this program, I don't qualify for a short sale, and that's incorrect.
Yes, because with HOFA, there's relocation assistance funds that could be available to you. And HOFA also uses an income versus your monthly mortgage payment. They use a ratio. And sometimes people don't fall within that ratio, but that doesn't necessarily mean, again, that you're not going to be able to qualify for a traditional short sale. So do not confuse the two as far as a HOFA short sale and just being approved for a regular traditional short sale.
Well, if you're a bazillionaire, you can't qualify for a short sale, right?
Well, the bank is going to look at you wherewithal, obviously, Joel. And we have seen people where they've had investment properties and they just wanted to sell the property because it was just a bad business decision. And
but Justin Timberlake probably isn't going to successfully
more
do
than likely not.
Short sale.
No, they write the check.
Right. And that's what the bank is looking for, Joel. They're looking for that person that they believe does not really have a true hardship, whether it be financial or, like I said, they had to relocate, whatever the case may be. And that's the person that they are looking for to say, I'm sorry, but you don't qualify. You made an agreement to this note and mortgage, and basically you have to live with it. But for most cases, that has not been the norm. And a lot of people do believe that they don't qualify until we actually have the opportunity to speak to them in detail, and they don't even realize sometimes that their situation is very much like many other people right in the neighborhood, but people don't talk about it.
Right.
So
I was speaking with somebody this week, and he's actually in the process of going through a divorce. And at the time when him and his wife they purchased the house together, they had no problem affording it. Now he's there alone. He can't afford the property on his own, so he's depleted all of his assets trying to basically make this payment. Mm-hmm. And at this point, he's going to struggle to continue to make the payment and actually live. And the bank understands that. And so in those particular cases, in his hardship letter, he's going to explain to him exactly what happened. And, the bank will probably understand that and fortunately, warrant him give him a short sale.
Let me ask you this: you talk about somebody going through divorce. So how does that work on your end as far as if you are dealing with someone that hasn't officially been divorced, so you don't know who's going to be entitled to that short sale?
When depending on how they took title. So if they're entitled together and they're still married, then they would both need to participate in the process. The bank is going to look, especially if they were both on the mortgage, they'll both have to participate. If they've already completed a divorce in that situation,
it's usually named in the divorce who
gets the property,
right.
And then what usually happens is through some sort of quitclaim deed, the property could be transferred to one of the individuals, and then that individual would go through. This is a very common scenario. We see this a lot,
right?
Unfortunately. Then that particular person will then go through the steps of the short sale, because sometimes they thought they were going to keep the property, and then it turns out that they really couldn't maintain the property on their own, and that's when they elect to go and try to do a short sale on the property. So that's typically how it works.
So let me ask the question, and we've been doing this show together for a long time now, and I already know the answer, but if you have somebody that's just tuning in now for the first time, I'm going to ask you, Ray, how much does it cost to do a short sale? How much do you charge?
Right, probably my top 2 or 3 question that I get. In a short sale, Joe, when you're working with any licensed industry professional, it is the norm. The title agency, the realtor, they will work with the homeowner to facilitate the entire process, like I was explaining to you, and they will only get paid from the proceeds of the closing from the lender. So your lender allows the monies to be paid to the title agency as well as the realtor. The homeowner does not pay any money to anybody unless for whatever reason they want to retain an attorney in a short sale transaction. So if anyone asks you for money outside of an attorney, candidly, you should run the other way because it is not industry practice for anybody to charge you money.
Even the servicer or the bank's not going to typically charge you money. Like under the Hoffa Protection Program, the bank is not allowed to charge you for certain things either. Like if they're asking you to pay for an appraisal or have a value done on your property, which has happened here and there from some of the smaller banks, but it's very, very rare that would ever happen. But when you're in the Hoffa program, which is something we keep talking about, but in that program, and when you're in the Hoffa homeowner protection program, they're not allowed to ask you for any money. No one is allowed to ask you. So it is a completely free process, and people need to know that they could actually complete this process and it not cost them any money out of pocket. In fact, they usually end up getting $3,000 at closing in order to actually complete the process and maintain the property and actually because they consider you doing the right thing. So they encourage them and they give them some incentive, some cash incentive, so that they can actually relocate and get back on their feet somewhere. They're not looking to put people out on the street. They're looking at look, if you can't afford your home, we understand. You can downsize to something that your income does justify and move on from this.
And then speaking of moving on, the other thing we haven't covered yet on this show, and we talk about it all the time for those who haven't heard it, when you short sale, there are often times where you can get into another property. You can buy another home within, 2 years?
Actually, believe it or not, they're in talks right now. FHA is in talks right now to actually bring that down to 1 year.
Wow. So what we've been looking at is with a foreclosure, you're basically shut out. You're taking this credit hit for a good 5, maybe 7 years. And we've been talking all this time about a short sale. You go through that. If everything is done right, oftentimes in 2 years you can buy a home again. Now you're telling me they're cutting that in half.
In 1 year. As long as there's some guidelines to that the program hasn't officially been launched. It's been in the news for the last couple of weeks though, that they're going to be doing it. But yes, you can actually once this thing gets rolled out to the banks, 1 year, as long as you meet certain guidelines, and you could actually repurchase your home, as long as you have that the supporting income and what have you to qualify.
Repurchase
Not
the home?
your home, sorry,
okay.
Excuse me.
Yeah,
you could repurchase another home.
Right.
And as long as you have that qualifying income, they'll actually allow you to, approve you for a new mortgage.
And one of the things that I always tell the homeowner too, Joel, we have all these programs, these great government programs, like Anthony was saying, that they're even thinking about loosening guidelines as far as FHA goes in order for you to actually be able to repurchase again within a year. But make no mistake, the bank does not have to allow you to do a short sale. So you're not entitled to do a short sale. So people need to understand that these programs that exist and the fact that the banks at this given point in time are willing to work with homeowners as long as you fall within certain guidelines to approve a short sale. Anything can change tomorrow. This might not be the case in a year, 2 years, 3 years from now. It's not something like, again, where you just at any given moment can call the bank and say, well, I want to do a short sale. And the bank says, okay, no problem. We are willing to do a short sale. Again, the bank has to be willing to accept less than you actually owe on the outstanding balance of your mortgage. That is the only way you could sell your property. Your title has to be what we call marketable in order to sell your property to a new buyer or a new investor, whomever the case may be. So you need bank approval to do that.
Yeah, short sales have been around for a really long time. Like this, although it's become very popular in the last, several years, short sales, I've had my first experience with a short sale probably about 14 years ago, believe it or not. These things were always around. But what's changed is 10, 14 years ago when you attempted a short sale, the guidelines were completely different than what they are today. Today, they've been much more lenient, and they've changed and evolved to help these people who have fallen into the situation. Because, and a lot of people are in the situation not because they didn't do the right thing. They really did try to take out a mortgage. They were really wanting to keep this property. They really wanted to keep on that commitment that they made about paying this mortgage. But things happen in life. Divorce happens.
Jobs. You lose jobs.
You lose your job.
You get a demotion. I mean, these are things we hear about all the time.
You can't control that, and the bank knows that. And, that's part of the thing with the FHA mortgage, I believe one of the guidelines that it is if you were in like a situation that it wasn't, it was outside of your control. If you were laid off due to an industry falling or whatever the case may be, they're going to take that into consideration now and not make you wrong for that. And that's really awesome that they're doing something like that, because a lot of these people, they really did nothing wrong. They really intentionally went into this with good intention, and you can't make someone wrong when they tried to do their best and it just didn't work out for them. I mean, it's unfortunate, but someone's not wrong for that.
All right, and you guys were talking about an attorney earlier. We know now that you should not be paying anything up front to any real estate professional to do a short sale, but an attorney obviously charges by the hour, and he or she is entitled to that. But you always speak to, if you're hiring an attorney, make sure that you have a plan. Explain that a little bit.
Absolutely,
Ray.
And we work with some very good attorneys ourselves, and there have been many cases where people were in imminent danger, and the attorney saved them last minute against a foreclosure, and there's nothing wrong with that, especially when you're at that point. However, and most good attorneys will tell you that do foreclosure defense, they can only help you for so long, Joel. Unless you're going to write a check to the bank and pay them for all the past due amounts, inevitably you're going to be facing a foreclosure. So if you're working with an attorney and that attorney is giving you sufficient time to get your affairs in order, then maybe a short sale is that answer or that solution for you while that attorney is working to give you that foreclosure protection. You definitely need a plan, because at some point the attorney will only be able to take you so far, and then you will run out of time, because we've experienced that. In most cases, Joel, when we talk to people, these are real-life situations. It just becomes a different name and a different property address for us. We've spoken to thousands and thousands of homeowners over the last 4 or 5 years. So these are real situations, real scenarios that we've encountered with other homeowners, and we're just, basically relaying the information that we've been told and we've seen, and hopefully it helps you make good decisions.
So you've heard about a lot of information today. You've heard about the HOFA protection program, as Anthony calls it. You've heard about the Mortgage Debt Relief Act and all of the different qualifications for doing a short sale. Again, you can find that how-to guide and all this information that these guys have been talking about at whatisashortsale.org. whatisashortsale.org. Don't forget the .org part. And if you have any questions, grab a pen. Here's the number, 888-262-6933, 888-262-6933. Again, Ray Noble, Anthony Krupe, the founders of whatisashortsale.org. I really want you guys to get as much information as you can if you feel like a short sale might benefit you. And that's probably a lot of folks listening right now, right, Ray?
Absolutely. And there's a lot of people that don't even realize that a short sale is a viable solution for them, and it is.
All right. Thank you guys for joining us once again. It's Your Property Radio. I'm Joel Malkin.
Great, Joel. Thanks. Look forward to seeing you again next week.
Thanks, Joel. Have a good day.